which I am a practicing lawyer, I'm a former United States attorney, and yes, I could have spoken without the PowerPoint, but hopefully it'll make things easier. So, utilities are public regulated monopolies. If you live in a certain area of Roanoke, in the Roanoke area, you have to pay, you have to use Roanoke gas. That's what a monopoly is. But because of the power of having a monopoly, they are regulated by the government, and they have to get their rates approved. Roanoke Gas has to get their rates approved in Richmond with the State Corporation Commission. Tomorrow in Richmond, the State Corporation Commission is holding a hearing on this proposed rate increase. The rate increase proposed is 10.6%. In fact, it's already in place. They put it in place on an interim basis in January of this year, and they want to make it a permanent rate increase. So tomorrow they're going to have a public hearing, but the good news for the public is, and we want to urge people to do this, is send comments in opposing this rate increase. You have until August 13th to file a written complaint, an objection to it. In fact, I'm going to lay out some facts here. I don't think they should get a rate increase at all. In fact, there should be a reduction for customers, for people who are paying for their gas here in the Roanoke Valley. But there's an opportunity to submit a comment, and I'm urging people to submit those comments. You can go online. Even someone as technology challenged as I can figure out how to do a comment. I'm going to be discussing today a letter that I have submitted to the State Corporation Commission outlining the legal and economic reasons why I think this rate increase is not justified at all and should be summarily denied. But think about it, an 11% rate increase, almost 11%, 10.6%. By its very nature in the economy of today, for people who are facing economic challenges, and just for any citizen, is an excessive rate increase. So that's kind of the backdrop, but this is what the gas company, Roanoke Gas, has to prove. They've got to prove that it's reasonable and just, that the 11% rate increase is reasonable and just. And if they don't prove that, the State Corporation Commission needs to deny their rate increase. And the State Corporation Commission, there's some old law out there. This is a 1923 United States Supreme Court case. But what it says, I think, at the end of that opinion, of the quote that I have up here, a utility company has no constitutional right to profits such as are realized or anticipated in highly profitable enterprises or speculative ventures. So what the United States Supreme Court is saying to Roanoke Gas is that you have a right to earn a reasonable return as other utilities, but you don't have a right to ask the taxpayers to fund speculative ventures. That, for example, that a speculative a company in a startup situation or other companies have an absolute right to do, but not a utility. And that's what the United States Supreme Court has said. So let's look at what's the economic environment that Roanoke Gas is coming to us as citizens. I'm a ratepayer. I'm a Roanoke Gas customer and have been for some period of time. So they're coming to me saying they want 11% more a month, or 10.6% more a month than each of us. So last year, Congress passed a significant tax decrease for corporations in America. You can debate the pros and cons of that all day long. It doesn't really matter for today's discussion. It was a significant tax cut that was given to Roanoke Gas and many other corporations in America. So the tax rate for Roanoke Gas went from 35% to 21%, which is a very significant decrease. That is part of taxes, or part of what we all pay on our gas bills. So I'm thinking, well, I'm a Roanoke Gas customer. The taxes have gone down, and that's part of why they're asking me to pay my bill. If the taxes go down, shouldn't I get a reduction in my gas bill? Shouldn't that come back to us, the customers, this significant tax break that the federal government has passed? So that is the backdrop for this. And so it seems ironic to me that they're asking for a significant increase on the backs of customers, when in fact the government has given them a significant tax break. The other thing that I've looked at, and I would encourage customers to look at, is Roanoke Gas has been very proud of the economic progress that they've made in the last couple of years. They have trumpeted their success. And we have no objection to them trumpeting their success. As a publicly traded company, they should inform us what's happening, and they have. And so in the annual report just last year, the President's letter, I'm delighted to report that 2018 was an exceptional year for RGC Resources. Net income improved from 17% in 2017 to 7.3 million, our fourth consecutive year of record earnings. So just last year, record earnings. But again, they're asking the customers to shoulder a very significant rate increase. Roanoke Gas has been very aggressive on cutting costs as well. Many companies are this way, automation and reduction of employees, but they've done that and they've trumpeted that success as well. So they've had a decrease of expenses, $751,000 or 6% from 2017. Again, that's a significant reduction. Company is doing very, very well. Revenues are up, expenses are down. Shareholders have benefited from this transition over the last several years. The stock price has gone up and the dividends have gone up. So shareholders have also benefited. So in the public documents, Roanoke Gas Company is painting a very rosy picture of their progress and what they're doing financially. But yet, they go to the government and on the backs of customers, they want a very, very significant increase to their rates. Now, RGC Resources is a 1% owner of a subsidiary of a company called RGC Midstream. And that is the investment vehicle that they have used to invest in the MVP pipeline. Now, 1% doesn't sound like much. Say I'm a 1% investor in a company, it seems teeny tiny. Not so teeny tiny when you figure out what it costs to build the pipeline. The estimates vary, but for sure the current estimate is $4.6 billion. Okay, maybe it's $5 billion, but when you start talking billions, it gets to be significant. So 1% of $4.6 billion is $46 million. $46 million is going to be the Roanoke Gas investment in the MVP pipeline. That is a very, very significant investment and a large dollar investment. Now, the Virginia Supreme Court, which kind of is the boss of the State Corporation Commission, they've been clear that company can't be for managerial imprudence, and they can't really be reimbursed for speculative investments. So what I think is that MVP is the investment, the $50 million or $46 million investment in a multi-state pipeline. That's an investment risk that the stockholders have taken. But that investment risk that the stockholders have taken, it's on them. It shouldn't be on the customers. And I can't underestimate enough the dollar amounts we're talking here. Yes, it's 1%, but in their most recent securities filings, what's called a 10Q securities filings, they note that they've had to increase their borrowing limits. Roanoke Gas Company, the parent company, has had to increase their borrowing amounts to $50 million. $50 million. So the bottom line is this. I don't think that customers should be the safety net for this investment in the MVP pipeline. However the chips fall on that investment for Roanoke Gas is however the chips fall. It looks like it's a significant financial risk that is only going to go up. As anybody who's in business knows, costs don't go down, they only go up. So it's $46 million today. What will it be a year from now? But the bottom line is it's a significant risk. And I think the law does not permit the customers to have to be the safety net for that. So I'm asking customers out there, we appreciate the media being here today. We want you to spread the word that there's a new deadline to get comments in. I would ask people to get comments in. Use some of the reasons I've outlined. You may have your own reasons. But ultimately, the rate increase should not be accepted in any fashion. There should not be any compromise increase for them. And in fact, I would urge the State Corporation Commission to represent customers, to look at the fact that there's been a huge tax cut, to look at the fact that the company is doing so well in its public documents, and to return a refund to customers. Thank you so much.